We don't survive as a society if we keep borrowing this much money. Assume the currency is the victim of the next crisis and invest in things that go up if the currency.
You're watching Silver News Daily. Subscribe for more.
What if I told you that the US dollar, the cornerstone of global finance, could be on the verge of total collapse? Sounds extreme, right? But John Rubino, a respected financial analyst, believes that dollar doomsday is coming, and when it strikes, silver won't just rise, it'll surge. Imagine a world where government institutions crumble, the dollar loses its dominance, and chaos spreads through financial markets. But amidst the ashes of a burning economy, one asset shines brighter than the rest: silver. You see, Rubino argues that as the US currency falls, silver becomes the ultimate lifeline. The mainstream media isn't talking about this. Big financial institutions don't want you to see it. But the warning signs are everywhere: ballooning debt, geopolitical tensions, and a growing distrust in US fiscal policy. So what exactly will trigger this collapse? And why is silver set to skyrocket when it happens? Stay with me, because by the end of this discussion, you'll understand why silver could be the key to surviving and thriving when the dollar falls.
Instead of just creating the thing out of thin air, which I think a lot of people thought that's what happened, but it wasn't. It was an actual existing government entity that is just repurposed to do the things Trump wants it to do. Fascinating little side story there, but yeah, what they're doing right now is taking kind of a sledgehammer to a lot of things. This is not precise what they're doing right now. They're just laying off huge sections of different departments and zeroing out a lot of their activities and stuff. And from a libertarian standpoint, this is by and large really good. Some useful things are being canceled, and we'll have to go back and start those back up. But generally speaking, when an empire has a central city that becomes too big and too powerful, you create this separate culture that is loyal to the empire and to the empire's central city, and not to the rest of the country. And that's what we basically created in Washington, D.C. We had this huge constellation of NGOs and lobbying firms and law firms and think tanks where, somebody can graduate from Georgetown University and then just hop from one of these entities to another, all of which are funded by taxpayers, and spend a career doing stuff like that, and without, really creating much of anything of value, but while making tons of money and impressing everybody with their important titles, and along the way, contributing some of that money that they get back to the politicians who financed that constellation of NGOs and consultancies, et cetera, in the first place. And that's what is now called the deep state, or the swamp, or the blob. And it's an impediment to getting anything real done, because it's a bunch of people who are just, at a trough, making money from the taxpayers without really doing anything, and certainly without wanting anything to change. So the idea that a lot of this stuff is being broken up is awesome.
The US dollar has long been seen as unshakable, the reserve currency of the world, the symbol of economic dominance. But beneath this facade, cracks are forming. John Rubino points to a series of warning signs that suggest the dollar's reign is nearing its end. Let's start with the staggering national debt, now surpassing $35 trillion. Every year, the government borrows more, prints more, and spends more. Eventually, investors begin to question, how long can this continue? At some point, confidence falters, and when that happens, the dollar starts to crumble. But it's not just the debt. Geopolitical tensions are escalating, with major economies like China and Russia seeking alternatives to the US dollar for trade. The rise of BRICS nations and their moves to trade in local currencies signal a global shift. The world's trust in the dollar is eroding. And as the dollar weakens, inflation creeps in, stealthy but relentless. What does this mean for ordinary people? Prices rise, wages stagnate, and savings lose value. It's a slow burn that leads to a rapid collapse when the tipping point is reached. Rubino argues that this fragile backdrop sets the stage for a sudden loss of confidence. And when faith in a currency disappears, History shows us what happens next. Investors flee to hard assets. Gold, yes, but more importantly, silver. Silver, often overshadowed by gold, becomes the dark horse of the financial markets. The question isn't if the dollar will face a crisis, it's when. And when it does, silver will surge, offering protection and profit in a time of panic. But why silver? Why not just gold? The answer lies deeper in silver's unique role in times of monetary collapse. And we're about to uncover that next.
Well, let's talk about the last month, because it's been absolutely fascinating and completely unprecedented, at least in the U.S. I mean, some wild stuff like this has happened in places like El Salvador and Argentina, where new leadership comes in and just tears up the playbook and does what seems right in the moment according to their ideology, and just creates a new country. And, nothing's guaranteed down there. We don't know if their experiments are going to work, but we're trying something similar here in the U.S. now. Trump came in and just hit the ground running. And, his first time around, he didn't know how to govern, didn't know how the government worked or anything. So his 4 years were relatively uneventful, and that looked really good in retrospect after the 4 years that came after Trump. So that's a big part of how he got elected again. But this time it's completely different, because he had all the think tanks behind him and all the executive orders all lined up and all the cabinet secretaries already chosen and everything. And so they just threw it all out there and have gone for it. And the strategy now that they're pursuing, everyone calls it flood the zone, because they're just throwing everything out there that they want immediately. And so it keeps opposition on the back foot. Nobody's able to really get in front of this stuff and stop it, other than some judges out there, and that's being adjudicated right now. But the Democrats in the legislature and in state houses and places like that are unable to stop what Trump is doing. So he's getting an awful lot of what he intended to get. Most of his cabinet secretaries are in place. And Elon Musk running Doge, which, do you know the story behind Doge? That's such a fascinating thing that I didn't know at the beginning. Was Barack Obama, when he set up Obamacare, the website had a lot of trouble. And so he created basically an IT company within the government, and had it be funded by Congress and everything, that was able to go into agencies and access their data and everything. So when Trump came along, he just repurposed that existing government agency and called it the Doge Department of Government Efficiency, short for Doge. And that makes it, in a lot of ways, unstoppable, because it's already a funded by Congress part of the government, with a mandate or a remit to be able to get into agencies' databases and look at the data, So that was really a stroke of genius.
Throughout history, when governments collapse and currencies fail, precious metals take center stage. Gold often steals the spotlight, but silver is the underdog that delivers explosive gains when the system cracks. John Rubino emphasizes this overlooked truth. Silver doesn't just follow gold, it outperforms when panic sets in. Let's rewind to key moments in history. In 1980, during a period of rampant inflation and economic instability, silver surged from under $6 to nearly $50 per ounce. It didn't just rise, it skyrocketed, outpacing gold's percentage gains. Fast forward to 2011, when fears of a global financial meltdown gripped markets. Gold hit record highs, but silver? Silver exploded from $9 to almost $50, delivering gains of over 400%. Silver thrives in chaos because it carries a unique duality. It's both a precious and industrial metal, giving it unmatched versatility during crises. But why does silver respond so violently when currencies falter? It comes down to accessibility. Silver is more affordable than gold, making it the go-to option for the average investor looking for a safe haven. When trust in paper money collapses, silver becomes the people's currency, a tangible, universally accepted store of value. Rubino argues that in times of a governmental failure, silver becomes more than an investment. It becomes a necessity, and the parallels to today are undeniable. The same economic pressures that triggered past silver booms, debt crises, inflation, and geopolitical instability are converging once again. The stage is set for silver to surge, but this time there's an added twist. Unprecedented industrial demand that could push silver's price higher than ever before. So what's driving this surge in industrial demand? Let's break that down next.
It's less and less likely that my kids are going to be incinerated in a nuclear holocaust. And the worst thing that we have to worry about is the value of the dollar falling off the table and, a banking crisis or something like that, which we can make money from. If you play a currency crisis right, it's actually a good thing for you as an individual investor. So we're back to that intellectual challenge. How exactly do we play the coming currency crisis? I think that it's possible that a well-run government handles this kind of thing in a way that maybe isn't crazy painful for most people. You've got people talking about gold now in the Trump administration, which is very new. Well, they're also talking about auditing the Fed and Fort Knox and everything. So these are the actions of people who understand money and who want their money to be sound. So they're really reassuring. So it's completely, and they're also talking about 50-year gold-backed bonds, which I think are kind of a stupid idea from an investor standpoint, because you're still trusting the government for 50 years to give you the gold that is backing the bond. But at least it shows that they understand that linking a currency to gold improves the quality of the currency. So this is all really reassuring stuff. There's no guarantee that we make any more progress beyond what we've made right now. But, between Kennedy at Health and Human Services and Doge with Elon Musk, and the other people in the cabinet, I think there's a chance of a lot of good things happening in the different cabinet departments too. So, I worry about the deep state striking back. And I think that it's highly likely that they strike back in very serious ways, up to and including false flag attacks and assassination attempts and things like that. So, it's possible that this is so much messier than it even seems like it is now. And it seems pretty messy right now. But survive the false flag attacks and the assassination attempts, and there's a lot of good to be done out there. And there are people in place who seem to understand what it is they're trying to do. So I'm pleasantly surprised and cautiously optimistic, but I'm still a gold bug. We still got the crisis that makes gold go through the roof out there waiting to happen.
Silver isn't just a hedge against financial chaos. It's the backbone of the modern industrial revolution. And right now, industrial demand for silver is surging at a pace the market isn't prepared for. According to the Silver Institute, global silver industrial fabrication is forecast to grow by 3% this year, surpassing 700 million ounces for the first time in history. This isn't just a number, it's a warning sign. The market is running out of silver, and industrial sectors aren't slowing down. Let's start with the green energy boom. Silver is an essential component in photovoltaic cells used for solar panels. There's simply no substitute. As the world races toward renewable energy targets, solar installations are set to hit all-time highs in 2025. Even with looming pressure on U.S. renewable projects, global demand is skyrocketing. Without silver, the clean energy transition stalls. This isn't optional, it's critical. Then there's the electric vehicle revolution. Silver plays a pivotal role in EV manufacturing, embedded in every battery, circuit, and electrical connection. Even if EV growth slows, the trend toward more sophisticated vehicles and expanding charging infrastructure ensures silver demand remains robust. Add to this the relentless march of technology, 5G networks, consumer electronics, and artificial intelligence systems all require silver. The industrial hunger for silver isn't just growing, it's insatiable. But here's the twist. While industrial demand soars, silver supply is struggling to keep pace. This imbalance creates a pressure cooker scenario. Silver isn't just rising because of investor fear. It's being consumed by industries at record levels. Rubino argues that when a currency collapse hits, investment demand will collide with industrial shortages, creating a perfect storm for silver's price to explode. So, with demand at unprecedented highs, what happens when the supply side starts to crack? That's the next piece of this puzzle.
It depends on how far we can take it. For instance, some of these agencies, like the education department, that's low-hanging fruit. They definitely have the political capital to zero that out, send the money back to the states, and thereby shrink the federal government a bit. And the USAID is another place that it just has so many outrageous things that it spends money on. That makes it an easy target. So they can stop a lot of that spending. It gets much tougher when you get into things like Social Security and Medicare. You can streamline that. And they're finding payments going out in Medicare and Social Security that should not be going out. So they can cut those payments out. That's not the majority of the payments that are being made, but it's still a legit number, very big to normal people, even if not huge in the context of government. And they can make those cuts. So that's possible. But the thing that is the most pleasant surprise for me so far is that they're actually talking about cutting defense. And Trump just floated with Russia and China, hey, why don't we cut our defense budgets in half, all of us, And then Pete Hegseth, the Secretary of Defense, just flat out said that there are big cuts coming in the Defense Department. So that's one of the things that didn't look possible for cuts. The defense budget has been kind of sacrosanct for such a long time. But, if you could take a third out of defense, then all of a sudden you're talking real enough money that it will make a dent in the deficit. Now, having said all that, I think the damage is really done as far as avoiding a currency crisis. We still have to go through the whole, the interest on our debts is bankrupting us and we're going to have to do some kind of a currency reset. All of that has to happen still. But that's survivable. The stuff that we were looking at even 6 months ago was existential. We were blundering into World War III with a nuclear power, which makes all the finance stuff completely irrelevant. We start shooting at Russians and somebody sets off an ICBM and civilization as we know it is over. But that's not looking as likely now. It looks like we're going to be able to settle, even if it's not on terms that makes the blob happy, we're going to be able to settle a lot of the geopolitical stuff out there. And so that's a very big deal. And it because it dwarfs a financial crisis in terms of danger, that if we take that off the table, the coming currency reset seems like a totally survivable thing. We're back to our talks, Dunnigan, yours and mine, being about an investment thesis instead of about survival. And, that's a huge change from my point of view where,
The silver market is heading straight into a supply crisis, and few are paying attention. While industrial demand surges to record highs, global silver supply is struggling to keep up. In fact, the Silver Institute forecasts that 2025 will mark the 5th consecutive year of a silver market deficit, with the shortfall expected to hit 149 million ounces. That's a massive gap between how much silver the world needs and how much is available. And when supply can't meet demand, prices don't just rise, they erupt. Let's break down the numbers. Total global silver supply is projected to grow by only 3% this year, reaching 1.05 billion ounces. Sounds like growth, right? But here's the problem. Demand is already outpacing supply, and the modest increase isn't enough to close the gap. Silver mine production is expected to reach 844 million ounces, but that's still far below what's needed. Some new projects in Canada, Chile, and Morocco might add production, but it's not nearly enough. And recycling? It's projected to rise by 5% to over 200 million ounces for the first time since 2012. Yet even this boost won't bridge the deficit. Recycling can't keep pace with industrial consumption, especially with high silver prices discouraging scrap sales in key markets like India. Meanwhile, byproduct silver from gold mines is ticking up, but output from base metal mines remains flat. Simply put, there's no cavalry coming to rescue the silver supply. John Rubino argues that this persistent deficit is the ticking time bomb in the silver market. investors are only starting to wake up to the fact that silver is becoming scarce. When the broader market realizes that industrial demand is devouring available supply, silver prices could surge overnight. And if a currency collapse occurs at the same time, the rush into silver could become a frenzy. But Rubino doesn't stop there. He points to an unexpected trigger that could light the fuse even faster: Trump's tariff policies. Let's explore how geopolitical decisions could become the catalyst for silver's next explosive rally.
The way you know that that's what's happening is the real estate. Like you said, when real estate booms in the capital city of an empire, that means the empire is sucking wealth from the rest of the empire and handing it to the people who are there in that constellation of things related to the government, but that don't really produce anything. But they exist to maintain the power of the swamp. And you're right. Northern Virginia and parts of Maryland and in the general DC area have had a real estate boom that's been epic in the last 20 or so years as the government has expanded like crazy. And so one of the ways that we know that it's getting fixed is if house prices start to tank in the greater DC area. And right now there's an awful lot of listings there, and it hasn't really translated into plunging home prices yet. But that's one of the indicators of success for Trump and his people is if people start moving out of DC and going back into flyover country where they came from, and house prices start to fall in the greater DC area. So I think there's a decent chance that in the next recession it'll be different from the way it was when you were there. During the Great Recession, government spending just went through the roof. They hired lots of new people, and like you said, real estate prices went up. Well, this time around, it's completely possible that the opposite is true. That if Trump succeeds in what he's doing and starts sending agencies out of DC and into California or Texas or Florida or wherever, and the people move with the agencies, that's going to take a lot of the pressure off the housing market and allow home prices to go back down to a reasonable level. That would be, bad for the people who stick around and see their houses get cut in half, their home equity. But it'll be great for the rest of the country because it will mean that influence and power is being dispersed instead of concentrated. And that's a much healthier way for a country to operate.
Just when the silver market seemed set for a steady climb, an unexpected catalyst emerged: Trump's tariff policies. According to John Rubino, these tariffs could be the spark that ignites a silver price explosion. How? By accelerating the supply crunch and pushing investors into safe haven assets faster than anyone anticipates. Let's break this down. Since late 2024, concerns about President Trump's anticipated tariffs have triggered a wave of short covering in silver futures. Traders who had bet against silver are now rushing to cover those positions, fearing sudden price spikes. This panic buying has already led to increased deliveries of silver into CME warehouses. In simple terms, the market's fear of tariffs is tightening supply even further, just as industrial demand surges. With every ounce moved into storage, there's less silver available for industrial buyers, driving prices higher. But the impact goes deeper. Tariffs don't just disrupt trade, they slow global economic growth. And when growth slows, central banks typically respond with looser monetary policies. Lower interest rates and money printing weaken the dollar, driving investors toward hard assets like silver. Rubino argues that these policies create the perfect environment for silver to soar. As the dollar stumbles under the weight of tariffs and debt, silver gains strength as a trusted store of value. And there's more. China, already facing economic headwinds, could retaliate with tariffs of its own. This would disrupt industrial supply chains, driving up costs for silver-dependent industries like electronics and automotive manufacturing. Higher production costs mean higher silver prices, further fueling investor demand. It's a feedback loop where tariffs tighten supply, raise costs, and spark panic buying, all of which drives silver higher. Rubino believes this chain reaction is inevitable. The market is already showing early signs of stress, with silver prices recovering strongly since the start of 2025. But the real surge will come when these policies are officially enacted, forcing institutional investors to pivot aggressively into silver. The question remains, what could amplify this surge into something historic? Rubino points to one final trigger, a global gold reset. Let's dive into how gold's next move could be silver's moment to explode.
There are two overlapping trains of thought out there. And one is war is good because it's profitable. There's a lot of people who just make a fortune from the U.S. military empire as we blunder around the world, invading everybody and then rearming the countries that we destroy and so on. You know, a lot of people make incredible amounts of money from that process. And then there's another group of people who sincerely believe that the U.S., with 5% of the world's population, should rule the world with the other 95% of humanity for the next 1,000 years. And they're doing God's work by destabilizing other countries and fighting proxy wars and et cetera, et cetera. And, you know, those two groups overlap. There's a lot of people who make money from it and sincerely believe in it. But together, they're a very dangerous group of people. You know, and they won't, I mean, they kill for a living, you know, they won't hesitate to resort to violence to protect their gravy train or their ideological crusade. And so, yeah, I think that they're going to strike back in big ways. And, you know, hopefully Trump and his people are expecting it, you know, and are going to do what they can to survive the, you know, the Empire Strikes Back scenario that is almost certainly coming. And, you know, beyond the military, there's that whole constellation of people at NGOs and at think tanks who make a living from a massive government that is funded by taxpayer money and borrowed money, so the future taxpayers' money. And they don't want to give this thing up. You know, they really love this gravy train that they're on because it requires very little work of them, or they don't have to produce anything in the real world. They're kind of like college professors in that sense. You know, if you're at a think tank or at a consultancy or someplace, your ideas don't actually have to be tried out in the marketplace of, you know, ideas or industry or whatever. So you can just write your white papers and teach your adjunct professor classes and lobby congressmen and stuff like that and make phenomenal money by regular people's standards without actually having to produce anything that is tested in any kind of a market. And that's cushy. That's really nice. And if somebody tries to take that away from you, you're going to be enraged, right? And so we're seeing that from the rest of the government here. And, you know, by the way, I don't want to lump all of the government in together. Like, you know, the Parks Department, the Park Service, they do real things that are very useful, and other people in other departments of the government actually do useful stuff. So one of the things that I hope doesn't happen is that we just don't take a meat cleaver to everybody and get rid of the good people in the federal government who are doing legitimate work and who are working hard, and you know, get rid of them along with all the people who are still working from home and, you know, putting in half days and stuff like that, and think they can't be fired because they're civil servants, or think they're untouchable because if they lose this one job, they'll just jump over to the congressional office where they've had an offer in the past, or the law firm or whatever. You know, they think they can always bounce to some other part of the blob. So, you know, hopefully we keep the good government and get rid of the worst parts of the useless government. And I know that's asking a lot as fast as things are moving, but I hope that's part of the plan to make sure they keep the best people.
While silver quietly builds momentum, John Rubino believes the ultimate trigger for its explosive surge lies in gold's next move, a global gold reset. But what does that mean, and why would it send silver prices soaring? The idea of a gold reset isn't new. It's the concept that when fiat currencies lose trust, governments and central banks will be forced to revalue gold, effectively resetting its role as the backbone of global finance. This revaluation wouldn't just push gold higher, it would redefine the entire precious metals market. and silver, silver would explode in response. Here's why. Historically, silver follows gold's lead, but with greater intensity. When gold makes a move, silver doesn't just catch up, it slingshots ahead. In the past, we've seen the gold-silver ratio, a key indicator of silver's relative value, tighten dramatically after gold surges. Right now, the ratio remains elevated, signaling silver is undervalued compared to gold. Rubino argues that a gold reset could collapse this ratio overnight, triggering a rapid silver price spike. But this reset wouldn't happen in isolation. It would likely coincide with a loss of confidence in fiat currencies, especially the US dollar. As the dollar weakens, central banks would scramble to stabilize the system, and gold revaluation would become a logical solution. The moment gold is reset, investors would recognize that silver, as gold's monetary cousin, remains dramatically undervalued. The rush into silver would be swift and violent, as markets scramble to correct this imbalance. Moreover, silver's industrial demand adds another layer of urgency. Unlike gold, which is primarily held as a store of value, silver is consumed in manufacturing. As industrial users compete with investors for limited silver supply, the shortage could become severe. Prices wouldn't just rise, they could explode. Rubino believes this convergence of monetary reset and industrial scarcity is the perfect storm for silver, and the signs of this scenario are already emerging. Central banks are accumulating gold at record levels. Inflation remains stubborn. Geopolitical tensions are rising. All these factors point to an inevitable recalibration of global financial systems. But Rubino warns that when the gold reset happens, there will be no time to react. Only those positioned in silver beforehand will benefit. Still, the question remains, what would the world look like during this financial transformation? Rubino paints a dramatic picture, a scenario he calls the financial hellfire. Let's explore what that looks like next.
Well, Milei is a stone-cold libertarian, and it's been really fun to watch him just shut down big parts of the government. And Argentina now is running a surplus, I think. And its currency is stable. Inflation is down, government spending is down. But of course, a lot of people got laid off as part of the process of shutting down big chunks of the government. And so you kind of have to get through the resulting anger and maybe civil unrest. And there's no guarantee that he makes it all the way through. So we'll see. But so far, it's been a really interesting and promising experiment. And the fact that the United States is kind of emulating him on a, vastly bigger scale is pretty damn cool. And the world is going in the right direction, I think. And I think the people who are standing in the way of it are petrified. The speech that J.D. Vance just made to the European Security Conference is astounding. Not something that you ever imagine happening. There's so many things that are happening right now that are kind of that before today were just libertarian virtue signaling. When audit the Fed, close the Fed, pull out of NATO. Those are things that libertarians say to show how committed they are to the cause, but not that they ever expect anything like that to happen. And here we are with a lot of this stuff actually happening, or at least being threatened out there. So, very cool. And yeah, I could see a growing coalition of libertarian-run governments out there, because we got 3 now, more or less, and we've got a lot of political parties in other countries that would love to would love to join that kind of a coalition. And we've got the ability, because everybody's watching Trump all around the world, so he gives legitimacy to that kind of point of view in other countries. So it's possible that new political parties that are along the lines of Milei or the guy in El Salvador or even Trump are going to spring up and become, legit parties with actual voters and a place in the parliament, et cetera, and maybe even, prime ministers and stuff like that going forward. That would be a really nice trend globally. But I don't want to get ahead of ourselves here, because an awful lot has to happen before this becomes a global, sustainable trend.
Picture this. Markets in free fall, currencies collapsing, and governments scrambling to maintain order. This is the financial hellfire scenario John Rubino predicts. a time when the global financial system teeters on the edge of total breakdown. It's not just theory, the warning signs are flashing. Inflation continues to erode purchasing power, U.S. debt spirals out of control, and geopolitical risks escalate by the day. In this environment, silver emerges not just as an investment, but as a necessity. What does financial hellfire look like? Imagine rapid devaluation of the US dollar, pushing everyday prices sky high. Savings lose value overnight, and trust in the banking system crumbles. As panic spreads, investors abandon paper assets and rush into tangible stores of value. Gold will surge, but silver will soar faster. Why? Because silver is more accessible. It's the currency of the people during crises. In times of financial collapse, silver doesn't just preserve wealth, it becomes money, but there's more. Rubino warns that geopolitical tensions could amplify this chaos. Trade wars, led by aggressive tariff policies, disrupt global supply chains. Nations hoard resources. Financial markets respond with extreme volatility. In this environment, industrial demand for silver doesn't stop. It competes with investment demand. Electric vehicles, solar power, and electronics manufacturers continue to need silver, further straining limited supplies. Then there's the psychological effect. As fear grips the markets, momentum takes over. Retail investors, desperate to preserve their purchasing power, will flood into silver. Institutional investors, sensing the shift, will follow. Silver shortages will become front-page news. Prices could spike overnight, leaving those who hesitated scrambling to catch up. Rubino calls this the tipping point. Once reached, silver's trajectory will be explosive. And here's the kicker. During financial hellfire, traditional safe havens like bonds, or even the dollar, lose their appeal. Inflation-adjusted real returns vanish. Silver, with its dual role as a monetary and industrial metal, stands alone. It becomes the ultimate hedge, the ultimate opportunity. But for investors watching from the sidelines, the question remains, when exactly will this surge happen? Rubino says timing is everything. And next, we'll explore the investor's dilemma of seizing the moment before it's too late.
Yeah, well, there's no way to avoid a monetary reset of some sort just because the numbers don't work anymore. I mean, we have an immense amount of debt. And it's not just federal government debt. It's consumer debt, corporate debt, derivatives. Everywhere you look, we're dangerously over-leveraged and therefore incredibly financially fragile. So there's a crisis out there that breaks the system just because the numbers are so outrageous. I mean, debt or interest on the government's debt is like $1.5 trillion a year, and that has to be borrowed, which makes the next year's deficit even higher and raises interest costs even more. And the only way to combat that in the short run is to cut interest rates dramatically. In other words, massively easy money to allow the government to borrow without having ruinous interest costs. But then that causes inflation. We saw in 2022 what it's like to increase the money supply by 30 or 40%, and then see our grocery bills go up by the same amount, right? And if we did that again, people front run at this time because they know it's possible. You know, back in 2022, it had been such a long time since there was legitimate inflation, you know, painful inflation. And then we had that happen, and now everybody remembers it, or they're still suffering from it actually, because our living costs didn't go down. They went up by a third or a half or whatever. And then they just stayed up there, you know, so a lot of people are having trouble getting by because of what happened in 2022. So if we try to deal with massively increasing government debt and spiking interest on that debt by cutting interest rates dramatically, which is what Trump wants to do, by the way. You know, as a real estate guy, he wants lower interest rates, and he's willing to publicly order the Fed to do that. If we do that, then you get a resurgence of inflation, which, by the way, hasn't gone away. You know, the last inflation readings that we've had are like 3.5%, going on 4%, you know, which is way above the Fed's normal target range. So if we spike inflation again, everybody's going to immediately start buying real stuff. So we'll buy, obviously, gold and silver. I mean, gold and silver is the beneficiary of every big trend that's out there right now. So people will call you up and buy a bunch of gold and silver coins, probably mostly silver at today's prices. And they'll start looking for energy stocks like ExxonMobil and Oxy Petroleum and Enbridge, the gas pipeline company, and maybe they'll buy.
The moment everyone's been waiting for is almost here. John Rubino's prediction isn't some distant possibility, it's unfolding right now. All the signs point to one conclusion. Silver's time has come. The global economy is walking a tightrope, the US dollar's dominance is slipping, and industrial demand for silver is hitting record highs. The perfect storm is brewing, and when it breaks, silver won't just rise, it will explode. Think about it. Persistent deficits in the silver market for 5 straight years. Industrial demand surging with no slowdown in sight. Geopolitical tensions pushing investors towards safe haven assets. And on top of all that, the looming possibility of a gold reset that could send shockwaves through the financial system. Silver is poised to deliver gains that most investors can't even imagine. Rubino's message is clear. The opportunity is now. Not when the headlines announce silver's breakout. Not when institutional investors make their moves public. By then, the easy gains will be gone. Silver's history of explosive rallies shows that when it moves fast. Those who are prepared stand to benefit the most. So where does that leave you? The biggest financial shift of our generation may be just around the corner. Silver's breakout isn't a question of if, it's a question of when. And according to Rubino, when could be sooner than anyone expects. Don't wait for the market to wake up. The smart money is already moving. The question is, will you be ready when silver surges? If you want to stay ahead of the curve and not miss the opportunities the coming financial reset could bring, make sure to subscribe for more insights like this. And remember, this isn't financial advice. Always consult with a financial professional before making investment decisions.
Buy uranium stocks, or maybe they'll buy really good quality real estate like rental houses and stuff like that. They'll just plunge into real stuff and away from financial stuff. And that brings about the currency crisis, because the ultimate financial thing is the dollar. If nobody wants to own government bonds, it's because they think the dollar is losing value at an accelerating rate. And there we are, and once that starts, where do you go? If you've cut interest rates and aggressively eased in order to stop government interest expense from going up and allow the government to borrow more, you can never raise interest rates again, because that immediately spikes government's interest costs on the bigger amount of debt that they borrowed because you cut interest rates to allow them to borrow more, So we're in that place now, which is kind of a death spiral. And, let's say Trump and Kennedy and Elon Musk cut the deficit back to $1 trillion a year from $2 trillion a year. That would be phenomenal. That's Winston Churchill level fiscal success. But it still won't save us, because we're adding $1 trillion a year to an already unmanageable amount of debt. So it still breaks. And so there's our investment thesis, assume the currency is the victim of the next crisis, and invest in things that go up if the currency goes down in value. And, that's a pretty straightforward investment thesis, but there's an awful lot of moving parts to it too. Because do you want, uranium stocks because we're going back to nuclear power, or do you want oil because we're going to slow down the transition to electric cars, if not stop it altogether? These are things we have to think about to decide how to invest for what's coming. But it all starts with this primary thesis of currency crisis on the horizon, the big fiat currencies finally failing and having to be replaced with something else. So we just want to be on the right side of the currency reset when it comes. And gold and silver are a big part of that thesis.
The stage is set. The warning signs are clear. But there's one problem: timing. John Rubino calls this the investor's dilemma. Knowing a massive silver surge is coming, but not knowing exactly when. And in financial markets, timing can mean the difference between life-changing gains and watching the opportunity slip away. So how do investors position themselves before silver takes off? First, let's talk psychology. Most investors wait for confirmation. They want to see silver prices rising before they jump in. But by the time headlines scream silver surges, the real gains are already gone. Rubino argues that institutional investors, big players who move billions, are already positioning themselves quietly. These institutions buy in the shadows, accumulating silver while prices remain suppressed. By the time retail investors notice, the breakout is underway. And here's the critical point. Silver's moves are sudden and violent. In 1980, silver exploded from under $6 to nearly $50 in just months. In 2011, it rocketed from $9 to almost $50 in 3 years. History shows that silver doesn't climb gradually. It slingshots. The window to buy before the surge is small. Those who hesitate are left chasing higher prices. But what's holding investors back right now? Uncertainty. Many believe there's still time. After all, silver hasn't hit new highs yet. But Rubino warns that the pieces are already in place. Persistent inflation, rising industrial demand, geopolitical risks, and the looming threat of a dollar collapse. The market's calm is deceptive. Beneath the surface, pressure is building. When the trigger, whether it's a gold reset, financial crisis, or geopolitical shock, finally comes, silver will move fast. Rubino also points out that the gold-silver ratio remains at historically extreme levels. This ratio has a history of snapping back quickly. When it does, silver's gains are exponential. The longer investors wait, the more they risk missing the breakout entirely. So the dilemma is clear. Wait for confirmation and miss the run, or act before the market catches on. But as Rubino sees it, the opportunity won't last forever. The final surge, he believes, is closer than most think. And in the final step, we'll break down why silver's moment isn't just coming, it's already here.